it forward. We've got Mumuksh Mandlesha, research analyst at Anand, Rathi, joining in on the show right now to analyze Motown. Mumuksh, great to have you on ET Now today. Thanks so much for your time. Mumuksh, clearly GST rate rationalization has helped, give that fillip to auto demand, which in any case was very strong. Can the momentum sustain into FY27, or do you think it's going to peak out in the first half?
Yeah, hi. Good morning, Aisha. On the demand side, I think as we have discussed, it's basically next year should continue to see the good momentum, and the first half will be closer to double digit. And then obviously with the base catch up, there could be a little moderation on the growth. And overall basis, we can say across the segment, a high single digit growth expected, with the exception of maybe tractors being a low single digit growth. Basically, going ahead for tractors, the El Nino factor could be the watch out. And this year, basically tractors, we almost going to see 24 to 26% growth. So quite a high base, and there was a lot of even the subsidy support, say from state of Maharashtra, which may not continue next year. Basically, a very positive outlook for next year as well, and also even for domestic and some of the overseas market like CVs, US Class 8 can do really well on a very low base. So accordingly, all those names can continue to see the good momentum. And there are a few factors to watch out which can have a negative impact. Is obviously the one commodity inflation part. There would be a need to take price hike to pass through. Also, there are some concern on memory prices going up, which can impact PV players and the El Nino for the tractor side.
Mm, that's quite interesting. But tell me, which segments, Mumuksh, do you think are going to emerge the strongest for FY27? Will it be PVs, two-wheelers, or do you think CVs will run up ahead?
Yeah, I think it's very similar kind of a growth for next year, almost 8 to 9% kind of range for across segments. So we prefer names like Maruti in PVs with the valuation comfort in low 20s, and they are able to hold on the good market share there. On the CV, we like Ashok Leyland, where again the good valuation comfort, and also very good on the margin side. They're performing. And in the two-wheeler, we like Hero MotoCorp, another comfort on margin side. Sorry, on the valuation side. So these are the picks in the OEM side. In the ancillaries, we like names like Gabriel, ZF's commercial vehicles, and Sansera Engineering, a play on the aerospace side as well. And also we like some of the names like Forging, a play on overseas CV, domestic CV, and also a play like Amaraja with valuation comfort, and a new opportunity on the battery side in the BAS area, which they recently announced. So these are the picks in the ancillaries as well.
Okay, that's quite interesting right now. And specifically about the CV replacement demand now, which is a multi-year cycle, you think, or was it just a spike that one saw in Q4?
Yeah, yeah. I mean, obviously, I think there are factors which price cut drove a lot of what would they call is a single transport owners to get into the replacement cycle or get into the space, which made the TCO and the loan cost coming down. And then also sometimes it gets bunched up with the fear maybe a more price hike can come ahead with whatever regulations and etc. inflation part. So sometimes those things also played out in the previous quarter. So going ahead, I think the infra pickup, overall economic activity also will be the key to sustain the momentum. But as of now, for next few quarters, at least the visibility remains very high in the CVs as well.
Okay, so that's on your visibility on when it comes to commercial vehicles. Mumuksh, talk to us about the raw material cost when it comes to certain metals, or when you take a look at the tire cost, rubber cost, and how that could impact costing and overall cost of production when it comes to auto companies.
Yeah, so I think one thing of a good part, I think if you look at sequentially now in quarter to date, this quarter Q4 and versus the Q3, at least the average prices are flattened out. and latest prices for except for the steel and for the natural rubber, they have started correcting. Uh, so I mean, there is a at least say 100 bips of impact can happen in the Q4 and Q1 quarter, and say part of it would get absorbed by price hikes, but part of would have an impact in the near term. I mean, it's very difficult to tell. I mean, over next 2 years whether that it will have an impact, but near term definitely there could be more than 100 bips impact on the gross margin side because of the commodity inflation. For tire names, obviously the natural rubber has seen a surge in recent time, which we have to see. I mean, whether that can now again impact their margins. Crude has also started inching up very recently. Steel is still going up. So there is definitely a element of margins to be little challenging near term due to this inflation part.
Mumuksh, lastly, if you could help us with what you are liking within the auto space, what's the pecking order?
Yeah, so Maruti, Hero, Ashok in the OEM side, and an ancillary we like Gabriel India, ZF Commercial Vehicle, Sansera Engineering, MM Forging, and Amaraja.
Okay, interesting. Great to have you then on the show, Mumuksh.
Yeah,
Thanks as always for taking the time out and joining in.
thank you so much.
Okay, let's